Hello everyone, hope this video finds you doing well. Sunday, January 27th, 2019. This is a market recap for the week ending, I guess, the 25th of January. Not much has changed, so we're just going to take a look at the charts, go through a couple of examples, give you my opinion of what I think is about to happen, and we'll go from there. I want to thank everyone that joined me on the live stream earlier during the week. I really appreciated it. All 6 or 7 of you that were on the stream. So it was the first time I've ever done it, and I know it didn't start out really good, and we went kind of long, and the format was a little bit wonky, but we'll get better as time goes on. Anyone watching the video, please make sure you subscribe to the channel, and also follow me on Twitter, because on Twitter I announce what time I'm going to go live on the stream. And when we get on the stream, what we do is you can put whatever chart you want me to look at in the chat box, and I'll pull them up and go through them and break them down from a technical level and just give you my perspective. And two heads are better than one, so anything I can do to help, maybe a different perspective than what you're looking at it as you're looking at it yourself. Maybe getting a second set of eyes to look at it and say what they think is a good thing. So follow me on Twitter. I'll let you know when we're going live, and then join us on the live calls, and we'll look at whatever you have. As far as the market goes, it's pretty similar. I'm going to sound like a broken record, but the market's been trending basically sideways a little bit. Today I want to dig into a few more specific charts, because I know people that are watching the videos that are looking at SPY just as an index, it doesn't look like it's doing much of anything, but there's a lot of setups happening in the individual stocks that comprise the S&P 500 or the NASDAQ 100, or the market in general. So sometimes you can zoom in on them, and they'll give you a kind of a precursor of where the overall market's going to go. So let's take a look at that. We're probably not going to get there just looking at, let's go to my charts, because anyone that's been watching my videos, the way it works with my charts. All right, so this is the charts that I trade off of. These red lines here, this zone in between the red lines, represents monthly resistance, and I know it's resistance because price is currently underneath it. And I guess just from looking at it, I can do it. I could always zoom out and get a better view, but for me, trading on a daily chart, I have these lines on here to help me, so I don't have to zoom out and look at multiple time frames. I update these resistance and support areas every week so that they're always current. And so when I look at my chart, I can quickly make decisions on what I want to do with price. So if we're looking at the S&P right now, so in between these red lines is monthly resistance, and in between the blue lines is the most recent weekly resistance areas. All right, so these don't always line up like this. Sometimes the resistance for your weekly will be down here, and it will be support. So it actually won't be resistance, it'll be support. So you have support down here, which means that the market is in an upward trend, and you'll find resistance here, which would mean that the upward movement is a retracement against a larger downward move, which a lot of the stocks in the market right now, that's where they're at. All right, so S&P is a little different because it's both charts point down, weekly and monthly, on a polarity level based on the way that I analyze them. So as I look at this chart, I'm a big fan of Tom DeMark trend lines, and he calls them supply and demand lines. They're very objective. So the latest swing high, now this isn't a swing high here, this would be, because to be a swing high, you have to close on both sides of the high, right? So we don't have next week's candle or tomorrow's candle, so we don't know if this is going to be a swing high. But if you go to the most recent one and then the previous one that's higher, I drew that wrong. I've been drawing them wrong since we've been doing videos. I'm doing everything wrong. All right, so if you project this out, this would be the in place supply line, and supply would be basically a downtrend line. So you see on Friday we came up and touched it. Now the most recent demand line, which would be an upward trend, is this one here, right? Well, on the last one that was broken was this one. So what happened here, the current one would be this, right? So because we did get upward movement basically these last 2 days on the S&P, but what I'm paying attention to is, the one that was formed here was broken to the downside here, and close on the other side of it. Typically, when you get that in a resistance area, the odds of a sell go up. Now, if let's say price punched through on Monday and it goes higher, I still probably wouldn't be a buyer here because I'm not going to buy anywhere in this zone. I don't like it. We'd have to get out of here, and then I look for opportunity. This is why I watch 80 different stocks. You know, if you don't get what you're looking for, then you don't make the market do what you want it to do. You just trade what's there. So if I was to get a trigger to go short, I would in this area, but I wouldn't look for a long in this zone until I get concrete proof that we're out of this and break out of this area. And you can miss a trade or two that way, you know, and being conservative, but it's better to not lose money than to, you know, chase the market. So my bias right now is that we're in a sell zone. The overall direction on weekly and monthly charts are down. So the most probable scenario from here is down. Now, it doesn't mean we're going to come down and make a brand new low, and because a lot of the polarity on the weekly charts for a lot of the stocks has changed to up. And typically, even though we've been in a bear market, if the polarity is going to change to up first on a day chart, then it's going to change on a weekly chart, and then it eventually turns on a monthly chart. So we could have bottomed out. I don't know, but I'll stay pretty nimble and see what happens on a day to day. But my bias right now is still to the downside. That hasn't changed. It's been that way for over a week now. QQQ, virtually the same chart. I don't have my I don't put lines on this chart typically, but if you look at it, it's the exact same chart for the most part. And they're gonna trade in tandem for the most part, you know, because they're indexes that are tracking multiple stocks, and the general market trades typically in the same direction. Let's look at some individual stocks just to kind of show you some different examples. I wrote a couple of them down. We'll try and run through them real quick. I don't think this is the one I wanted. I think I wanted Comcast. Yeah, all right. So I wanted, and the reason I'm doing it this way, let's back out to a weekly chart. I feel great when I get to my end of the week review, because when you're trading intraday, a lot of the times you lose your, even though I have the bars on the screen and everything, it always feels good to zoom out to the weekly chart because it just cleans everything up. It makes everything make a little bit more sense. So here on Comcast, you had a large down move. This is the area, the monthly resistance that I identified. This has probably been on my chart for 4 months now. And we reached that zone, and you see there's a reaction there. Now, we don't know if it's going to continue going down and making a new low, because if you look at this up move that started down here, ended here, you had a really strong retracement, and this could be the first leg of the move back up. But typically what happens is you're going to get, because we don't know, there's always buyers and sellers in the market at the same time. So the dynamic of how many buyers versus how many sellers is consistently changing based on price levels. And what happens in areas like this, you typically just have less buyers because a lot of people bought here, and they're getting a little more afraid as you get closer to here, so they start taking profits. And then people that are contrarian and view that the market's going to continue down, they're actually selling here. So the balance of how many buyers and how many sellers gets out of whack in the favor of the sellers. And so typically, even if this is the first leg of an up move, there's going to be a reaction the very first time that you get to this area. First time price reaches an area is a very important thing. So there's going to be a reaction here most of the time, and that's how you get retracements. You know, it pushes the price back down to an area where people are willing to get back in and buy it. So what happened is, if the market ultimately wants to go up and it's bouncing off of this, you know, overall large move, and then this is, you know, where it was going to stop, and we're going to continue going up, up, and up, you'll typically still get the reaction here that's going to push it down for the opportunity for the pullback buyers, you know, the guys that want to buy it when it retraces back 60, 70%, 50%. This is what creates that opportunity, is the indecision in the market, the lack of additional buyers, the entrance of new sellers, and just overall not knowing what the market's going to do. You know, because I mean, this move here is a year old. You know, it was from May of, well, not quite a year, but from like April of 2018 until, you know, the peak in November, it looks like. So these things happen over a long period of time, and everybody's not watching all these charts. They're trading intraday. So when this sell pressure comes in this zone, there's momentum players and a lot of short-term and swing traders that are trading it down. And you never know who's going to win, you know, but you know where the reactions are going to happen. So this is just an example of that. Let's see. Let's look at Microsoft. So my bias there would be down. I'd look for a down move in that zone, but not necessarily push down and make new lows. Same thing here. Here's monthly support for Microsoft. All right, so price came down. It's been consistently going up. It reached monthly support, immediate reaction to the upside, but the weekly resistance is here. So that lines up for this week. You may see some selling pressure to push it back down for buyers to get back in, or maybe come down and test the low. I don't know. I mean, this zone, sometimes it looks like this. We're in an overall bear market. So with the rest of tech, we could see it push down and take out this low, and we get a deeper retracement on this bigger move, but ultimately it could still go back up. Timing is really important in trading. So as you look at these charts and you kind of break it down like this, it starts to make a little bit more sense. We're currently going down weekly direction, but overall big picture, things have been going up. And this is just a retracement and a bigger upward move. And I don't know when it's going to turn and go back the other way, but it's already hit that zone where they normally turn around, and this could be it. It may not respect this resistance at all and just blast through this, So we'll see. But like today, while it's in this zone, I would probably look for some type of sell opportunity and I want to be out of the market before it got down in this area where the buyers are going to re-enter and push it back up if it's going to go back up. I try not to predict the market. I just try and play the odds. And your odds are higher in these types of zones if you get confirmation in a resistance area to take the short. But you have to know in the bigger picture where you need to exit, because you don't want to get caught thinking it's going down, 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 and you just bought a small retracement leg and or sold a small retracement leg that you're going to get killed on when you get down to the bottom, right? So you just want to know those things. Let's look at something else. I have a giant list here, but I don't want this video to be long, so I'm just going to we're going to skip through a couple of them. But I just want to show you how my charts are set up. Monthly resistance is set here. We're in the zone here. Ideally, I would be most comfortable with some type of sell position here. I mean, I'd be a buyer down here, but I'm a seller here because it's too close. And a lot of these charts set up this way. Same thing here. And you can see that you're getting reactions at these zones. You're getting reactions. Price goes there and you get a reaction. Let's look at AT&T. Same thing. The weekly, and these are up to date. I did the updates on my weekly charts. So these blue support areas or resistance areas where the blue lines are, they're fresh for this week. I just did them this morning before I made the video. So their support here, the direction on a weekly chart for AT&T is up, but you're in a sell zone because this is monthly resistance, and a lot of the times the monthly move is going to overpower this move. So what you could get here is a push down. The first time it touches, there will be some reaction. It may come back up, and then you'll get a bounce off of that move further down. But you're typically, the first time you enter these weekly support and or resistance areas, you're going to see some type of reaction because it typically represents indecision in the market. Because most people aren't looking at super long-term time frames. And but these areas are very powerful. I mean, I could go through this chart and show you all types of places where it adheres to it, but it's just good to know them. But you can see that there's reactions, smaller candle bodies, and then we got our first red candle in that zone. Let's look at Walmart. Same thing. Weekly support down here now, fresh support. So I'm looking for buys in this area based on the chart. But currently, we've just touched the monthly resistance. Be careful buying in that area. And we got this inverted, I guess it's something like a hammer. The tail's kind of long for a hammer, but you get the point. So there was a reaction here, and you may get some pushback down to the support area to buy back out. So, and maybe just look at one more, Verizon's on my list. I have more, but let's keep the video a little shorter. This one didn't quite make it all the way down to monthly support, but it got pretty close. And then, of course, it hit weekly resistance, and we got the reaction last week. For 2 weeks now, we've kind of failed there. So if you're looking at all these charts, a lot of them, the bias on a weekly and their shorter time frame has changed to up, but the resistance is currently to the downside. So what I think is going to happen, including SPY and QQQ and all of these, is we're going to get some type of reaction out of this resistance zone. Now SPY may go up a little bit more and get into the monthly resistance area before it truly finds some type of resistance, but I wouldn't buy here because you just never know. I mean, the odds are lower for you to win your trade buying in this area. Not to say that you're wrong if you buy. It's just your odds are lower. And when you're trading, the goal is to keep the odds in your favor because you're going to lose trades. That's why you use a stop loss. If I was a sell here and I had a 1% risk on the trade, if it went against me, I lose 1% and I get out of the trade. no problem. You win 5 other trades, or you win 3 more trades, and your wins are bigger than your losses, and you'll be a net winner. So losing is not a problem. You just have to control your loss. But you don't want to just lose for the sake of losing. That's gambling. So you want to put the odds on your favor. And in this area, resistance is a higher probability play. Sell is a prior probability play because of the resistance area. And also be careful, because we're in earnings season. Be careful about earnings. Earnings is a little bit scary sometimes. Let's look at Intel, for example. So Intel reached a resistance area, and there was a reaction, right? And it was kind of having some problems, and it finally broke through this line here, and you think it's going down. And the day before earnings, it gaps up and spikes way up. Do you think that was random? And then we find out the earnings come out and the price flies down. And imagine if you were in a sell position in this section here. It stopped you out, took everybody out of the market. That means whoever stops you out, now they get a chance to sell in this area. And then the price gaps down. Now, the monthly direction on this chart is to the upside. I mean, we've come down here and touched monthly support, and look what happened. We bounced off of it. We retested it, bounced off it. I actually bought this retest right here and made money really quick on these 2 candles here. And I was out before we got to the support area, the resistance area. And but this is just an example of how you could have been short here, which could have been right for right now, but the market took you out. And then off earnings, it dropped or gapped all the way down. It came down as far as this. Now, what this is a 61% retracement of the overall move up. See what happened? Price touched it, and now it's on its way back up because the monthly direction's up, and the direction for this stock probably is going to be up. So, but earnings is a very tricky thing. If we get within 5 to 10 days to earnings, I typically, I'm a swing trader, so my trades can last anywhere from. Some of my trades are short term, but they're still based off a daily and weekly chart. But sometimes you're at the very beginning of the move, so the trade will pan out for you the same day. But for the most part, trades are open from 2 to 5 days. So when I get that close to earnings, I just stay away from it and go find something else. I've got a long list of stocks here, so go find something else, because the earnings, it can be dangerous. It's like trying to trade during non-farm payroll when you're trading currencies. It's just, don't do it. It's just better not to. All right. So that's it for me this week. My bias is still down overall for the short term. It's not a long-term deal. A lot of these stocks have turned to the upside, and we may have put in a bottom. It's possible. I really don't know. I never claim to know. But we may have put a bottom in. We'll see when we get down there and it tests the area. But for right now, I know a lot of the weekly charts, the polarity has changed to the upside, which is good for the market. And but we're still at a major resistance area. So we have to clear that out first. And I think what's going to happen is a bounce off of that, and then we'll maybe go further up after we retest the bottoms, or get at least 60 or 70% of the way down there to the bottom to see what's going on. So that's my outlook. Yeah, it's pretty much it. Join me, follow me on Twitter. Join me on the live calls so we can go through some of your charts and tell me what you want me to take a look at, and we'll see if we can figure some stuff out together. Like the video, subscribe to the channel, and I will talk to you guys a little bit later in the week. I'm out of the country, so the place where I stay, the condo I live in, where I'm at, I don't know how good the Wi-Fi is for the streaming. I have like 1 gigabyte at home. It's super fast, but here I don't have anything close to that, I don't think. So it's going to be interesting to see what kind of quality we get out of the stream next week, but I'm going to stream no matter where I'm at. I'm carrying everything around with me. I'm mobile studio right now. So you guys have a good rest of your weekend or Sunday, and have a good start to your rest of your week. And you'll see a video from me maybe tomorrow or Tuesday to kind of start the week off and see where we are as far as the market goes. All right, you guys have a good one.